Megan Greene of Manulife Asset Management still with us. You're a nerd, so here's your take.
I am. I mean, what government shutdown and what bad weather. I think this is a blockbuster jobs report, both in terms of average hourly earnings and, as Mike pointed out, in terms of hours worked. So for all the concerns about underlying weakness in the economy, of which, there aren't that many signs of in the hard data, I think this suggests, that that's right. The economy is actually still strong. It'll be interesting to see what the Fed does off the back of this. And of course, the Fed has time, but for all the worries that the Fed won't be hiking rates anymore and that it's data dependent, I do think that there is an argument that the data will justify rates.
Yeah, it's an interesting question whether Mr. Powell would have said the same things the same way if he'd had these numbers beforehand.
Yeah, that's right. Exactly. And as Mike pointed out, construction, manufacturing, those are high-wage, high-hour jobs. And so the trend throughout this cycle has been that we're adding all our jobs in low-wage, low-hour sectors. And so that's why we haven't had wage growth. But this is bucking that trend a little bit.
And we keep adding these jobs and adding these jobs way past the point where we thought we were going to be exhausted. And the labor force participation rate is still inching higher, which might suggest there's even more excess capacity in terms of workers.
That's right. So I do think it means we might be able to pull some people in from the sidelines, and that's sort of the Fed's plan. It started under Janet Yellen, but I also think we need to rethink our definition or estimate of full employment, which the Fed has, to be fair, revised a couple of times, but I think that they're going to have to revise it again.